I just received my largest ever dividend of $500 to my account. Today I'm going to be going through my dividend history, how I received this dividend, what I plan to do with it, and my broader investment strategy. What we'll be doing is we'll be going through some of my historic dividends and the journey that I've been on growing my portfolios, what's led me to this point, and again, what I plan to do with my dividends now and going forward as a young investor. So to start off, as I said, I received my largest dividend and it was around $500. This came from my Vanguard portfolio. If any of you have seen any of my videos, I have two stock portfolios. One is on stake and that's sitting at around $53,000 to $54,000, and my other one is on Vanguard and that's sitting at around $47,700. Overall, to preface, I'm not a dividend investor, and every single dividend I get, I reinvest back into my portfolio. And that's exactly what I plan to do with this $500. So, today I wanted to go through my story of my very first dividend all the way till now. As you can see, my first dividend was on the 14th of May 2021, and it was paid from the first stock I ever bought, Apple, where I received $1.45 USD. Obviously, that's not very much, but as you can see, as the years went by and I continued to invest more and more, these continue to grow. Even look at May the next year, $2.75. It's not a massive jump, but it is a big percentage jump. So not much on the dollar side, but high on the percentage. And as I continued to grow, I started receiving larger dividends. As you can see here, 16.93 cents in VOO. So nearly $17, then nearly $25. And it kept growing and growing, and then nearly $32. And this just kind of shows the snowball effect of continuously investing into your portfolio, dollar cost averaging and reinvesting your dividends. $41 in VOO. And then as you can see here, I got $31 in dividends from Costco. This is the reason why I bring this up, is because some stocks pay special dividends. So Costco paid out a special dividends, which it sometimes does to shareholders when the stock is holding a lot of cash. Because the company can either reinvest that money or it can pay it back out to shareholders. And that's why I got such a large dividend from Costco. All the way till now, and you can see my biggest dividend I've received in this portfolio was recently I got $57, and this is after tax. So my brokerage takes a 15% withholding tax, which is a little bit annoying, but it is what it is. Again, I'm not a dividend investor, and all my dividends are reinvested back into the portfolio. So hopefully one day these can grow. And a goal of mine is to hit over $2,000 in dividends this year. Majority of this $500 came from these two ETFs, obviously. One of them that pays a very high dividend yield is VLC. This is the Australian Large Company Index ETF. So this tracks the largest companies in Australia, and it does pay an attractive dividend yield, and I have around $11,000 currently in there. It used to be around $15,000, but I did sell some of it to allocate some of that money to VGS. VGS is Vanguard's International Shares ETF. This also pays a dividend, and obviously as this portfolio grows, hopefully it will hit $50,000 by sooner than later. The goal was to hit it by the end of this month, but with how the market's retracted, I don't think that will be possible. So hopefully around or in June or before then, I can hit $50,000 in this portfolio. And that way I'll have over $50,000 between both my stock portfolios, which will be quite a nice achievement. And it gives me a bit of diversification and balance. With this $500, I plan to reinvest it right back into VGS. Like I said, VGS tracks an international shares, so it holds over 1,500 shares globally. It's heavily weighted to the US, and then it also has exposure to Europe and Asia. And the reason why I choose to invest my money into VGS is because I think it gives me a great sense of diversification, and then I'm invested in a lot of quality companies. Meaning, this allows me to, like you could see with my stake portfolio, pick individual stocks such as Microsoft, Google, as you can see here, Apple, Costco, and still have the broader market tracking returns. As I don't believe I'm some exceptional investor, I think overall, I get to have a bit of fun investing in individual stocks, but I still want to have exposure to the overall market in case any of my positions get heavily hit, as like what's happened recently with many of the big tech stocks. That's another one of the reasons why dividends can be so good for investors, is it can give you a bit of stability. Obviously, dividends aren't always guaranteed going forward, so you have to keep your eye on things. But when markets are down like they are at the moment, getting a nice dividend payment like this just gives me some extra money to reinvest back into my portfolio. And as an example, that should buy me basically 4 shares of VGS, so I can continue to grow, meaning my next dividend should hopefully be the same size, or if not bigger, if I continue to dollar cost average into my portfolio. And this does depend on when the individual stocks in the ETF decide to pay out their dividends. So, like I said, my dividend plan going forward is I want to hit $2,000 in dividends this year. So last year, we can have a look at how I did. This is where I track a lot of my dividends across both the portfolios going all the way back. And you can see my previous largest dividend was from the last quarter, where I received almost $400. So basically a $100 increase, which is quite nice. And if we have a look at last year, between the two portfolios, I made $837 AUD from my Vanguard portfolio in dividends, and I made $293 USD in my stake portfolio for dividends. Again, because my stake portfolio is a lot more geared to growth and tech stocks, which don't pay a high yield, I don't expect as much of a dividend. But as I've grown that portfolio, hopefully this year I can hit around $350, who knows, maybe even $400 if I continue to grow it in dividends. And then for my Vanguard portfolio, that's where I see majority of the money coming from. So if I can hit around 1,000 to 1,500 in dividends this year, I should be well on track to hitting that $2,000 mark. If we have a look at these two graphs, you can see my dividend history across both the portfolios, and you can see a nice upward trend that's taken place as it continues to grow, like that snowball that I was mentioning earlier. Especially with my Vanguard account, this is very apparent. As you can see, because my dividends are all quarterly, you can see over time as things kind of track on, I was getting dividends as small as $19, $17. There was a really big jump here up to 120 as I started to gear up and grow the portfolio. 238 fall kind of back because certain dividends are only paid at the start of the year or half year, again depending on the companies that make up your ETF. But yeah, this is kind of how the history has been going with it. If we go back to my portfolio, a goal for me is to get this portfolio to over $110,000 by the middle of the year. If I continue to do that, especially while stocks are down now, this is a great time for me to be buying shares so I can get more dividends in the future by holding a bigger slice of the pie. But that's just kind of how things have been going. And like I said, with this $500, I plan to reinvest it back into VGS so I can continue that snowball. And with my stake portfolio, majority of my dividends, like I said, are reinvested back. My VOO position, I tried to put it right back into VOO or into some others. Recently, I used the money to buy some of Amazon's shares. But yeah, you can see this portfolio is sitting around 53,000, but my dividend yield on this is a lot lower. So overall, I'll do another portfolio video tomorrow, kind of just a general portfolio update. But I wanted to do a video today just kind of talking about dividends, as it's not something I cover often on this channel. So feel free to share your thoughts on dividends, and if you are a dividend investor, and what you would be doing with your dividends now whilst the market is pulling back.